Airlines are facing a challenging summer as they navigate the aftermath of cheaper July 4th travel fares. What's next for summer travel trends and airline ticket prices? As we head into the busy July 4th holiday period, millions are preparing to take to the skies. However, the overall forecast for the rest of the year remains uncertain, as airlines contend with a surplus of flights paired with a lack of demand. The summer is on sale, which certainly implies lower fares, wrote its Southwest Airlines CDO Bob Jordan in a recent interview. This summer, the average domestic round-trip airfare sits at approximately $265, showing a slight decline of 3% compared to last year, and marking the most affordable airfare since 2021, according to Fare Tracker Hopper. In fact, ticket prices reported in the May U.S. inflation statistics showed a decrease of more than 7% from the previous year. Southwest and many other airlines, including Delta Airlines, American Airlines, and Alaska Airlines, have revised their projections for 2025, citing economic uncertainties, including fluctuating tariffs under the Trump administration and challenges such as a lack of international tourists to the United States. Now, as these airlines prepare to release their earnings, the financial results could shed more light on the industry's outlook. "We're stable where we are, but we have not seen an inflection back," Jordan commented. In response to these challenges, some airlines have outlined strategies to reduce flights that do not generate profit, especially during off-peak days following the summer season. Airlines typically see the most of their annual profits in the second and third quarters. From Tuesday until Monday, the Transportation Security Administration predicts screening at least 18.5 million travelers at U.S. airports, although no single day is expected to surpass the record-breaking 3.1 million travelers who went through checkpoints on June 22nd. Although a significant economic downturn has yet to unfold, the appetite for air travel hasn't matched the optimistic expectations some had for this year and early 2025. Despite some hints of a slow labor market, recent U.S. jobs data have been stronger than anticipated. Could the airline industry's ability to adapt to current economic conditions determine its long-term success? TD Cowen analyst Tom Fitzgerald suggests that while the overall macro environment has shown resilience, the airline sector has experienced only modest demand. Furthermore, recent spending data from Bank of America revealed a decline in consumer expenditure on air travel, raising questions about whether these patterns will turn around in the upcoming months. Investors are closely monitoring any signs of renewed demand and how airlines plan to adjust their capacity in the second half of 2025. While international travel originating from the U.S. has been a bright spot, benefiting major global carriers like Delta, American, and United, fares have also eased for international flights, with airfares from the U.S. to Europe have averaged $817, almost $100 lower than last year, and comparably priced to 2019. Meanwhile, flights to Asia were averaging $1,328 in June, July, and August, down 13% from the previous year. What are your thoughts on how the airline industry should navigate these uncertainties? Share your opinions and join the conversation below. Do you think airlines will be able to turn things around in the coming months?